All right, guys, we're going to jump into the October 27th, 2015 Tuesday class with the Edge guys. We're just going to immediately start showing Dave's charts and his screen. He's going to kind of talk about delta divergence, finding turns, and also when you could get maybe a big push in the market. I'll let him do the talk, and I just will briefly talk about Dave being in the Edge and in the trading room, one of the longest of anyone, so he's been around a while. But Dave, take it away. Looks good.
Okay, good morning, everybody. I want to make sure that I'm just bringing up another screen, so make sure you're seeing what I want to show you, and it looks like you are. So Anthony this morning gave me a little heads up and said, hey, why don't you present this, what you're doing with delta divergence. And so as happens most days, a brilliant setup presented itself, and so I've grabbed my three screens, and I'm just going to walk through the three things that got me there, that got me into a trade. So let me just, the quick what happened. Anthony, how do I get, can I draw on the screen?
Yeah, in your panel, we can't see your panel, but in your panel, there's on the left side under the mic a few buttons. There's a pen. If you hit that, it drops down the color of the pen, the fact that you select the pen. Do you see that?
Not yet, but I'm looking for it.
It's on the panel that you see got the screen sharing. It allows you to see what people are looking at. All those features.
Okay.
You don't see it?
Just give me a minute. I don't yet. Just give me a minute.
Take your time.
Got it. Let's see if this works. All right. So let me jump to the end and tell you where the trade started, and then I'll tell you what got me there. So I entered right here at 54.75.
It looks good. It's a blue pen, right, Dave?
Yep.
All right, perfect.
Long 54.75 right there. And so then the question, of course, is, well, how did you get there? Because that looks like a really good entry. Well, it's a little bit of George, a little bit of me, a little bit of Anthony, but let me go through this. So the first thing we're looking at is this is George's 2500 delta bar. And you'll notice this is a really short bar, it's probably 6 ticks wide. We went minus 2500 and didn't go. And this has this short bar is a very high probability of predicting a turn. So we went minus 2500, 6 ticks wide, although most of those, really it was mostly in 4 ticks. You notice the POC's right in the middle. So great start, thinking about a turn. Some other things, it was right in the middle of a zone that I had pre-market. So this was a nice spot right here. So now we're starting to line up. We get into that. I didn't do it here. You get the end of this long delta bar, and by the way, I've given Anthony the definition for this three-way delta chart to publish later. At the end of one of these long delta bars like this, you often get a continuation. So I wasn't going to buy this here, even though a number of things had lined up. This bar had not formed yet. We're at the end of a long negative delta bar, and that often says we're just going to keep going. So hang out and watch as we go through this, and you notice we trade up and trade back down into a spot that says, okay, everything's lining up. We're on support. The 2500 delta bar has formed. Let me flip to the next page, the next screen, because there's even more things that were lining up for me.
If you right-click, you could erase drawings, Dave. Right-click and then get back to your cursor. You see that? Okay, you got it.
Thanks.
Dave's an IT guy, so he's really, really smart.
All right, so here we go to, this is the previous screen. I've got a forehead set up, and the previous screen we saw is my upper left. This one is on my upper right, and this is the chart here in the upper left of the screen is my delta divergence chart. I've actually been trading with this for a long time. It predates George's at least me using George's chart, but it's a good complement. So in addition to everything else we saw on the other side, now we've got a divergence here. Let's see if I can get a drawing tool. We have another delta divergence here where you notice this is a sum of the last 20 bars worth of delta. It's starting to go up, yet the price is not going with it. So this sort of a formation often precedes a move up. And this is, I consider this a long range in our time frame, long range radar over the hill. And I've said it before, but I need to say it again. If you trade this in isolation, you will get your face ripped off, because you'll see a lot of formations like this that just turn into continuations. So this is long range, it might happen kind of information that plays in with the other things that we've looked at so far. So you notice, so my trade entry was right here. So you notice we've got the delta divergence is happening. Also, I watch the delta trend, and you notice that the delta, this is not summed, it's just the delta bars for each of the price bars, and this is an 800 tick chart. You notice it's starting to go up too. Guys are starting to buy this thing. So the long negative bar, stuck a bunch of shorts. In fact, I'm going to need to go back to a previous screen because I neglected to show you something over there that showed me more stuck shorts. But so this is the setup on the delta divergence as well. So now everything's is starting to line up for us. Back to the previous screen, I'm going to show you one other thing on the three-way delta. And what this three-way delta is trying to do is show you the delta in 3 dimensions on the individual bars at individual price levels, then vertically within a bar what the sum of the delta is, and then horizontally for 30 bars back. And so this is a sign of stuck shorts. You notice there's a lot of negative delta, a lot of aggressive selling, and nothing happened. Took that big punch in the face, and nothing happened. So here's some of it in an individual bar. Here is a whole bunch of it in the sum, and what happened in this 4 P&F bar. And then here is where it happened, summed across the last 30. So you see a bunch of guys sold, a bunch of shorts got stuck right there. So there's the rest of the picture. Let's go across to my final chart. My final screen here, and this is just the context of what was going on in the other equity markets. This is the ES, the NASDAQ, the DAX, the YM, the Russell, and the Eurostoxx. And you'll notice that where the trade happened, get a pen. The trade happened right in here. Everything was lining up to go. Where these guys have failed to make lower lows all through all of the other markets. So this was more confirmation that it was just an ideal place. So this was a confirmation of the trend, and then I'm going to go back to the original chart, which is really where I spend my time looking at that. And then the lower left is where I've got 7 domes. And so I was actually watching, once we got into this, once I identified that spot, I was actually watching the domes to decide it was time to go. So that was actually my last trade of the morning. So that's it. I'm done. I'm gonna prepare for this presentation. So now I'm ready for questions.
Dave, I got one. Do you hear me?
Okay.
You hear me?
Got you. Go ahead.
Sometimes it takes, after I unmute, it takes a while for me to actually come on. But anyhow, where you got long, what was the time? That was in the after 9:30. That was the same time where. Hold on, I gotta move your chart to the other screen so I can see mine or your window. Hold on one second.
Okay.
Man, I don't.
Yeah, I got my trading platform shut down, so I don't have the exact time. But it was in this little spot, this little thin spot right here is where
Yeah, that's where
I
it
was
took
going.
off, and I think I had said this has got I think the way I said it was this caught the attention of shorts that were mingling in the room, laughing and giggling, and now they're kind of nudging towards the exit. You remember me saying that? Was that the
I
same
do.
time? Maybe. Okay, so it was the same timing.
I believe so. Yes.
All right. I can't take. Hold on a second. I'm not used to looking at other people's screens here. So, oh, here we go. That's why. All right. I just got to get back to my chart. A second. Yeah. So what I had seen was more or less, Dave, just the market going like. I guess if I was quoting the market, let's just say in that area, it went bid bid bid, or it went bid 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 pretty quickly, like it like jumped, and literally as you guys take your time popping in the questions for Dave, we'll go through them, but it literally is like the record at a party screeching, getting people's attention, and it's that moment that's really the greatest confirmation to all the other great things Dave lined up, because the whole point of what Dave is looking at is getting enough people trapped short to create the buying that would send us higher and allow him to be profitable. So you tie a lot of powerful order flow, relationship things together. There's the strategy, the bias, the execution, all melded into one. All melded into one. I guess that was my question. Let me ask, um, well, Tom, who's also been in the room and an edge guy a long time, could you do a quick step-by-step summary of what you went through, Dave? Like if you were to smash it in, and I was someone who knew nothing about trading, but you only had like 30 seconds or a minute to explain. Could you go back through it?
I could give it a try. Yeah.
All right, I'll see.
It's a kind of there's a lot of moving parts there, but
Well, I mean,
we can try
don't
to
go
get
through each chart, but just without showing anything, just walk through your thought process step by step without having to show each step.
Okay. Well, so we'd broken down and gotten down into we'd been through a couple of we traded up against 6061, and you'll see I had that as resistance. We started to trade down. We paused at the next level down, which is 5758, and we broke on down. It didn't pause there long. It just launched right down into it. But then when we got to 53 and a half, 54 and a half, it really started losing momentum. There was a very long bar, a very long down delta bar. It was a long 6 PNF down, and it had the potential to continue, but when it came back up and then retested the level and didn't get as far, it didn't make a new low. It got a tick or two away, and the rest of the markets, and I was watching bonds, oil, and the six equities, and all of those were doing the same thing. That was when it was just time to go. It was watch the trading in the dome, saw it start to flicker like it was about to head up, and just grabbed it.
Perfect. I like it. And then there was, I think we had a magnet.
And it wasn't completely effortless. Yeah, it wasn't.
Yeah, there was that little hook, one hook that was like, man, but then it was gone. It's like, what's important about a trade is it sucks to be tested, but if you pass the test, you really got them. So it's like 6 and 1/2 dozen the other. You don't want to be tested, but the best trades come with a test that you're able to pass. Where it's like, man, I wish it didn't hook back down here because I got to make a decision, or it's getting closer to where I might want to exit, and then wham, it goes. You shook out other people who couldn't stay in it with you. That's passing a test. Now, I'm not trying to advocate passing tests by holding on to every trade. That's not being diligent. But passing your test by it didn't get through where you thought, you would be wrong. That's why knowing what your risk is and having good risk stop placement is important so you could be a stronger hand. in your position. But if you could withstand a test, once it goes, you got it. And the really good traders know when to add at that point. When I say good trade, because it takes a really special kind of longer, I don't want to say a longer term trader, but adding the winners is a really, really unique, unique skill set. But when you could get to a point where you pretend like you're not even long, and if you weren't long, if you really weren't long, you'd get long. That's when you would add. I don't add a lot to losers or really to winners, but I have in time saying, man, if I wasn't long, I'd be buying this right here. I don't like to do it because I start throwing things off my desk if the second entry made the first entry and threw the whole trade into a mess. But it's all about coming out of like the tests. You test all the longs, you shook out the weak ones. There's less of them in the market, so you could go up because there's less sellers. Great thing. Now, here's a couple things that was important. We have this every day, but it seemed to be cleaner today. And most people wouldn't have seen it, understood it in the trading room because they don't listen. You guys tend to listen more, but the magnets were good. They eventually went back to 57.5 on their way down to the levels Dave is talking about. And then we had an upside magnet of, I think, 60 it took out. And then it just, so those orders in the book are important. Next question, Dave. With all those sellers selling at that time, what kept it from going ahead and going down? Give them your answer, Dave, and I'll give them mine.
Guys who wanted to buy it down below. I mean, you had the aggressive sellers, and somebody was absorbing it all. I don't know who that. Probably a number of somebody's.
Yeah, passive buyers. It's almost like It's almost like if I could draw the analogy of a neighborhood and people are selling their houses and everybody's selling their houses and the price can't go down and they're like, who the hell's buying these houses? Nobody's moving in. Well, there's a Chinese investor. And then the last guy to sell his house saying, nope, I ain't selling it. Price explodes. Someone's invisible. They're absorbing it. When I say invisible, they're passive buyers, resting bids, and the sellers. Another good visual, Dustin, is punching guys in the face and they don't fall down, they don't flinch. They're still getting hit. They're just not flinching. But usually when I punch a guy, he flinches. What did you see on the dome that made your decision, Dave?
So the bids started thickening up a lot. So it had been flickering back and forth. In fact, if you look at this right here, you could see what it was doing in the 2 PNF. So it's kind of flickering back and forth, but I started seeing the bids thicken up a lot and the offers were thinning out. And so it was starting to look like there was a lot more people wanting to buy it down lower. So that's what did it for me. The offers thinned out, so I took it. I just took what I could get.
Jill asks about is there, and maybe you have one, maybe you can't show it because you can't think of one. Is there another? Could you show us another powerful negative or positive delta divergence from George's chart that you decided not to take the trade? And
there's actually one right here.
And show us what the other pieces were that weren't lining up for you that you decided not to take the trade in that case.
So look right there. So this is actually, and I've been watching these. Anthony and I were kind of IMing back and forth during the session. I've been watching these for a while. It's a very high percentage deal, but this one didn't work. And if you look at it, it all happened so quickly. See, it's this bar lines up with this zone, but there wasn't any chance to even think about it. I mean, it went through it and just kept on going.
Oh yeah, well here's context. I'll give you a great reason why you wouldn't want to buy it there. You had all those resting bids that the market knew about and wasn't afraid of. You had all the longs leaning on that guy. If anything, you're selling it through there. So it's context and it's knowing those bids were there.
That's right. It was quarter, half, 3/4, and it was probably, close to 5,000 contracts between those three prices?
Right. And the way to look at it is, well, that's a lot of buying. Yeah, but the market knows it's there and it's not afraid. It's going to attack it. It's not afraid. What is, so it's like, that's a great example. That's a great question to bring that up. Jan says you have a lot of levels on your charts. Are they equally important?
Yes.
All right. Do you play your entries and exits between consecutive levels, or do you hang on, scale out of some, etc.? So after, like, maybe you're in, do you get out at a level that's maybe overhead?
Yep.
I think, okay.
So I like the 248 approach that you do, Anthony. I was on that before I met you, and I've kept it and I like it. But those levels are definitely, if I'm long, if you look at this chart here, you get into with this resistance, it's time to start getting out. If you hadn't gotten out of some of it, I mean, you're already out of a 2-4 here. If you're not out of some more there, you're making a mistake. Because I remember this traded back down into here, and this turned into support. The VWAP in this zone. So, but it was a good intermediate. It was a good exit.
Brad gives a great kind of summation of what you're saying, and then he's asking if it's correct. Let me just read through it. So Brad says, I watched Dave set that trade up and take it. I think he saw sellers getting stuck near the lows in a bad location as seen in the 2500 Delta footprint. It rallied a bit, probably shorts taking profits. Then late shorts came in and tried to push it lower, couldn't get it to go, and trapped them. You could see it on David's footprint chart. Then I believe he saw buyers coming in and getting to go bid on the dome. Also oil, the Dow, the NASDAQ starting to go bid, and bonds started pulling back off their highs. Everything lined up, the ancillary markets, order flow. Does that sound right, Dave? Shorts got stuck in a bad location.
That is exactly right. Yeah, Brad and I were talking about that in the room as I was going through it. So yeah, he had it exactly right.
That's it. I mean, that kind of the fact that Brad, and I'm not surprised, but could talk. That's professional trader speak. You'd fit in a construction site if you never knew how to swing a hammer or do any kind of those trades. There's a certain kind of language that they use, and they could tell if there's an outsider on a site. Same thing in a prop firm. You come in a prop firm, and most guys would talk a certain way and be out of their element. But that kind of write-up, what I just read off of Brad, would fit perfectly into a professional trading conversation. It's because he is, because Dave is, and it's a great kind of development just to hear people talk like that. How do you come up? Now, this is up to you, Dave. How do you come up with your levels? Would you rather not talk about it? I know I don't talk about it, so I wouldn't blame you.
Actually, I don't mind talking about it. If you look at rotations on a PNF chart, I've got a PNF chart that I blow up full screen, and I've got 5 days worth of volume profile. In fact, let me see if I can drag one over, and I'll just show you. Because I mean, I don't mind, because actually, the more people that use them, the better off I think I am. So let's see. So there's the chart that I look at in the morning to set the levels. Anthony's levels are in here, and I just go through. I got a spreadsheet, just go through and look at them, and you'll notice if you're looking at rotations and volume. I mean, I did this at 8 o'clock this morning, so things have changed a little bit, but it's going to be really obvious when you look across that where it's changing direction, and that's all I'm really looking at.
I like that, and I like your comment that more guys use it. It ain't going to matter, because here's why it's not going to matter. Just by looking at how he gets his levels, I can tell you right now, it's not how I do it, but it's the same rationale. The reason why they'd work with high probability is because that's where the fights were. That's where people were bloodied. And that's where they'll probably have to get out of a trade that they didn't get out of, and there'll be the baby bird story. So that's why levels of support resistance would work, is because there has to be some stuck traders on the other side that are trying to buy it to cover a short, trying to sell it to cover a long that they're taking heat or took heat on. Now it's coming back to the scene of the crime. That's what these levels would be to me. Scene of the crime levels. It's unique to the person who got killed there. It's unique to the guy who killed him there. It's unique to the cops that went there, the people who witnessed it. And it's just like a price that you guys trade in is unique to you. Well, if you're the only guy that traded in that price range, it's probably not that important to the rest of the market. But it is important to the rest of the market if a lot of guys did business in that area. So I like it, Dave. That's a good rationale for levels. And I don't think there's too many because you got to remember, you could look and see once they get played out. You got to be good at knowing that. All right, that level's already either worked, or understanding the context going back into it. That's what most people don't get when they put levels on a screen. That they're constantly like qualifying, disqualifying them as you get to them and through them and everything else. I like it though. Another question.
And
Go ahead.
It doesn't take long, by the way. This is not a long process. If you had a big move, it takes a little bit longer, but it probably took me. It's less than a minute per market. So I'm doing this in the the 6 equities plus the bonds, the notes, and the yen.
Because you just got an eye for it. You're just click, 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 right? You got an eye for
Yep.
Yeah. I like it. Dave picked a nice resistance level, says Brad, yesterday around 61 or 62 today. You could see the longs getting trapped there also. Could Dave talk about how he found that level?
Well, I can, and it is, let me bring my pen up here again. And it's really this right here is what we were looking at. Let's see if we can do it again. Oh, this live chart, it's not sticking around with me. So let me go back to the other chart and we'll look at it, and it'll be better context anyway. So I was looking at this right here. So you got all those, that's a 10 PNF. You've done all that business. It's been banging up against that level. And we were talking about 62 quarter also, which was, I think, the close from yesterday. I mean, it's when you get this number of 10 PNF bars lined up like that, and it's just holding, there's some work to do there to get through it. You can look across also and see how much other business has been done at that price, and you can tell it's, and just look across here. It's the reason it's a level. And the fact that it took all that work and we just barely got through it and came back down. So it's still a big deal.
All right. And also, well, he just following up. It all lined up with yesterday's close and the start of the overnight selling, right? I would say.
Correct. Actually, that's right, because here's the close from yesterday. We're at 62, was it 62 quarter, so it's just below that. So we're looking at right in here.
You know what, Brad? I'm sorry, Dave. Finish. I'm sorry.
I was going to say just below the value area high overnight. I don't ever look at it really in that context, but it's certainly lined up in this case.
What was I going to say? About Brad's earlier explanation confirming that that's what Dave was looking at when he talked about his trade he articulated. That is that's something that you're able to do without thinking about it no more. And you could follow up on this, Dave, but everything Brad said, like, this is happening, that's happening, this is happening, that's happening. You don't have to go through a checklist that takes you 5 minutes. Those are things that your mind is already absorbing and kicking out reaction to. Is that a fair way to say it?
It is, and it's taken a lot of work to get there. I mean, it's a lot of discussion with George after the regular room closes. We get into the TeamSpeak room. The discussions with George have been invaluable, and I've just added to all this. So yeah, it's becoming much more automatic, and really the key to me, and it's something to be probably pretty transparent about. One of the things that I'm doing for a while, I was picking 10 of the 4 good trades that happen in the day, and so you figure that out. If you've got that many that you're not really sorting them correctly, and so I've got reaching a point where I'm clearing out the bad ones and really focusing on when everything lines up, and that's something that I've gotten from discussions with George, and I highly recommend it. I mean, just wait till all the pieces are lined up and get comfortable sitting on your hands.
Yeah, the thing is, number one, the toughest part about this business is knowing what to learn. And then once you know what to learn, you got to learn it. The toughest part, though, is knowing what to learn. And I try not to sell people on what they need to learn. Because that's really hard to tell people. They don't. This is where you guys have another advantage over the people who don't know and get this stuff is what you think you need and what you actually need are two different things in this business, period. What you think you need to learn when you're becoming a doctor is probably what you need to learn when becoming a doctor. But for guys getting into this business, what you think you need to learn is not actually what you need to learn. So that's why I don't go out and convince people that because it's hard to convince people around from what they need, so I don't want to bother it. And it's just like, this is what you need. I'm not going to debate it with people. This is it. This is how you got to talk, and this is how you got to absorb. So it becomes a reactionary state. But again, that's just give yourself more and more confidence as you go through, because you're absorbing market functionality, what moves price at its most rawest infantile level. That has to get you encouraged. You know what to learn. Now you go on to how to learn it. Ancillary market. Everything Brad said is not something that takes a long time to know. Russell did this. The DAX was doing this. The NASDAQ, the Dow, they were weaker. Oh, they just go bid. Bonds just came off. The yen just came off. I'm long. Here's where I'm out. Now I watch. They're going to really pop the champagne above 60 or above 54, whatever it was. They're going to 56.75, or they're going back to that thin spot. They're going to those big. And so it's just a confidence. It's a confidence thing. It really is, and it also strips out randomness. Brad says if you split the overnight profile, you could see the selling and resistance. All right. I'm going to take your word on that one, Brad. I'm going to take your word for it. Well, this is all good stuff. Any more questions? Jan comes in with one. What's your average size and stop loss, Dave?
So this I've got a mechanical stop at 4, and recently I've been trying to get, and have been getting much better with that. In fact, I'm often finding myself in what would be a loser and taking a +1 and getting out of it and watching it go the other way. Size, I've gone anywhere from 1 to 3 and trying to grow that. I mean, that's as I said, for the longest time I was finding 10 of the 4 good trades. Well, that just doesn't work, and so I'm staying small until I get consistent, and I have become much more consistent. So I expect to be growing that to grow that size. I mean, my plan is to, Anthony, it's your deal. 6 to 12 ticks per contract, and just scale the sucker up.
Is it fair to say even when you're not consistent in your past, you still haven't lost money? It's just about you have maybe accumulated. You still were a great manager of your risk, and as you were learning. Is that fair to say?
No, I've lost money. I mean, there's no doubt about it. I've never blown out an account, but even a number of small losers will add up to a fair bit of money. So, I've lost money. I don't know how many people get in this business that don't. So,
yeah, right. I mean, there's no doubt, and there's guys that been down big in the first 2 or 3 months in a prop firm that have a couple good weeks and come all the way back, but they start great years in the past. I never started out really bad where I had to come back any given year, but I'm just thinking of guys that were down for the year. And here guys are just wonderful traders. And I remember a risk manager saying, so-and-so is down for the year, and it's like March. But so-and-so wasn't down for the year come December. It's just what we go through as traders, getting there, giving some back. Jan asks, do you scale out of a loser, or are you all out?
Nope, all out.
Good. I like that.
And it's the mechanical. I know you don't recommend mechanical stops, Anthony, but for me, if it gets to 4, if I screw up and let it get to -4, 90% of the time I'm wrong, and I just need to be done.
No, that's good. I'm not against mechanical stops. I'm against mechanical stops that nobody cares to adjust, and you kind of said you've adjusted them. That's what's important. So I like that. Brad says, how much pre-market prep work do you do? How much and how long? First, how long does it take you, Dave? To let's just say, you got all the time in the world before you want to start trading. Still, how long will it take you to get set?
10 or 15 minutes max.
I like that. And you'll pop in your levels. Do what? Read a little bit about what happened overnight. What else? Anything?
Yeah, look through the overnight summaries, what's going on there, and do levels. And frankly, the mechanics of doing the level is far more time consuming than actually figuring out where the level goes.
Yeah, just clicking.
Yeah, exactly.
Don't you have the band saved as a reference line, so you just click and the band appears of 4 ticks wide, or on market delta?
Yes, it's set up. It's external data. It's the same approach that
yes,
we use to get the reference lines in. I'm just using a local file. So I update. That's right. Every day I update. I start out with what I had yesterday.
The
interesting part to me about that is oftentimes as we move up and down, I never take stuff off the bottom. I just let it go as we go up. So I'll have a lot of levels below. And so I start deleting the top ones as we trend down, and a lot of those levels that were down below are still good. And you look at them and go, well, they're still there. They need to be moved a tick or two. So it works amazingly well.
So, and when someone looks at a chart with all those levels, they're like, oh, yeah, no, nobody's saying that in this room, Dave. Nobody's saying that because they think like mine. They don't think this way. But the retail audience would look at that. Oh, of course, one of them is going to work. What they don't get is that not all of them are you playing. You're not playing all of them. They've been qualified, disqualified, and even if the notion that there's too many, listen, you're waiting for other things to line up to take them. The context, and again, that comes into having a skill. I like the 10 or 15 minutes, and you're right. The mechanics of it take the longest. I'll show you guys sometimes how I pop in the alert levels on the EDI, which I share with a web file or public file so you guys could pull them in. But Dave does it in a local file. Same. I guess it's pretty much the same difference. It's just where you're pulling them from.
Deal. Same format, same everything.
Yeah.
Just a different location.
So you got to type them in, and wham! Once you update. You don't update. You know how to recalculate without importing data, right, Dave?
Right. Once I do it I've got a separate page set up, and so once I do all the levels, when I get back over to my main trading screen, they're already done. I mean, it's updated.
Okay. So you hold the shift key down, hit the green button. You don't even have to do that.
You do have to do that. You have to hold the shift key and do the little circle on the chart where I do the work. But when I flip over to the other page with all the screens, it's already updated.
Nice.
So Market Delta is smart enough to do all the updates for you when you update them in one screen, and they're all linked. When you update it in one screen, it does all the rest.
I like that. Yeah. Well, I mean, so the mechanics take the longest. And what's interesting when you guys come up with the right reasons, and now that Dave shared the reason for his levels, it's previous fights, clusters. But when you guys come up and put them in, you'll realize that you're actually reviewing what the market did most efficiently, because you're popping in where the market had its previous fights. So you're actually, you're absorbing and reviewing as you're just doing that. And then I do the same thing. I come in and then I look at where magnets might be based on where my updated alert levels are coming in from the overnight price action. I read the summaries trade the news puts out. That's all. I know what's on the calendar. I write it on my sheet. I know that. I don't read a book, neither does Dave. It takes me 10 or 15 minutes and I'm ready to go. Because as Brad puts it, a lot of what you're trying to understand and absorb hasn't happened yet because the game hasn't started. So I noticed that you don't have the bid offer numbers on the footprint. Why is that? The bid times ask. Any reason?
Well, I thought you were talking about the current, so I do have the current one here, but it is the ability to absorb the information. And this actually comes from, this is kind of a pilot thing. So I can't sit and read the numbers fast enough to really gain much from them. I can see if it's 2 digits or 3 digits or 4 digits, but I can't really see what that number means. But if you see this right here, you know there were a bunch of aggressive buyers right there. You see this right here, you know there's a bunch of aggressive sellers there. And
I
so
like it.
if you get that in the middle of, and you look where it is, and we had the same sort of thing in here, you can see it very quickly. You're not having to look at the numbers, and out of the corner of your eye, you can see that stuff.
It's not going down. Yeah, it's better quick glance stuff. I like it. I like it. George,
there's some more of them over here, by the way. Sorry, let me give you a couple. There's a couple more really good ones right here.
Yeah.
There's that guy, not going anywhere. Here's this guy. Didn't go that far.
Right, didn't go, couldn't go. That's why it had to chop a little bit before it eventually fell.
Correct.
And then there was that moment I said, this is the best chance it goes, a miniature head fake. And again, the same thing that made me think it was going to go up through where Dave has given his example through, well, not up, but off the lows, where Dave gave his example actually. The same reason why I felt this their best chance to go up was the reason why I thought they had the best chance to go down to those big resting bids. The tempo picked up. Circle that big red bar right before the big down bar.
And that's what, and by the way, I missed this one because I had entered over here and got this one, and I'm very reluctant to reload once I have a trade at a price. I'm very reluctant to reload that because it seems like a lower percentage. So I missed the good part. I got a little bit here, but I missed this.
Well, you got to remember, and that's something that's just being human. And even though Dave's from Texas, he's still human. You don't, like, you're damned if you do, damned if you don't, and it didn't work, it's not going to work. You just got to trick your mind and say, if I didn't do that, what would I do right now? I'd take it. And then you could kind of play the percentages back that way. But either way,
still got paid. I got paid, just not as much.
Right, there you go. That's a good weakness to have because you're still getting paid. You're still recognizing it, using the right stuff. I think that's consistency and the road to consistency, the road to be able to say I could have a pipeline of revenue through my trading skill is having trades and having setups and having timing done on with order flow and market relationships. That, I'm not saying that everybody who understands market relationships and order flow is going to be consistent, but when you're able to use those two things, and that's the reason why you're consistent, you're going to stay consistent or you're going to stay profitable. It's the reasons, like guys who make money for 2 months, if it's not because of market relationships and order flow, you're going to give it back. I guess that's the point I'm trying to make. George, not George F., but the other George, who coincidentally is a pilot also. We won't hold it against it. You want me to tell you a funny story real quick about pilot? About being a pilot? I actually wanted to be a pilot. So in between my tours on the floor, 17-year-old as a runner, and then I got back down there in 1996. I went to college after high school, couldn't get back down into the city as I was going to school, commuting to school. And so during the day, I worked for my brother. He did electrical work. And I actually had a first 19, 20-year-old kid when I couldn't get back downtown. I was about 20. I was working for my brother for 1 or 2 years. And I was thinking of being a pilot. And I visited Boston because my sister married a pilot. He took me up on a plane and everything else. My brother said to me, and then we're back on the job, and it was me, my brother, my other brother, and two other guys that worked for us, and we'd always joke around with each other. My brother says, so you want to be a pilot? I says, yeah, I'm thinking about it. He goes, well, take all this shit over here and pilot up over there. And that was it. That's my story when I hear about pilots. From that day, I became a trader. All right, George says, after price passes through them or reverses on them, do you adjust them, or is there a time that you clean old levels up? That's a good question. About
Every
your
morning.
levels. Just every morning, not intraday?
Nope. And keep in mind, I don't usually trade the afternoons anyway.
Okay.
So if I was to trade the afternoons, yeah, I'd probably tweak them up a little bit, but in the few times that I've done it, the moves are very small. So.
And you already know that this level's already been played out. You
Right.
don't have to make it disappear. So it's all about becoming familiar with the levels and what the market's done with them already. So that's a good question, and that's a good answer. But I like this presentation, Dave. I know it was last minute, but you've been talking about different stuff with it. Shared a new chart, and you come through. This was good stuff. Let me ask you though, do you have any input? You talked about it in the room. I mentioned it on an impromptu kind of announcement in the team room last Friday. Anything mechanical with the short bars on the 2500 bar that you're noticing for turns or continuation that you would add? Stuff we discussed late last week?
I would really just reinforce how good they are. I mean, and you think about what's happening in there is you got 2,500, you got off 2,500 aggressive seller contracts, right? 2,500 aggressive sellers, and it didn't go anywhere. So, I mean, I would guess, and I'm just guessing on percentages, but I would suspect it's a 75% prediction of a turn when you get one of those.
Yeah, and what do you have one? Well, this is George's. No, that's not. That's your three-way delta. Do you have one? Oh, that's right. That's the center one, the white background, right?
Yeah, this one right here. So that was the 2,500 there. And this is George's. I don't think I've changed anything on this chart of George's. There's one here. This one's not quite as good, but it's still interesting. It's a short bar. Not really, it doesn't really conform to all the things that we're looking for. What we're looking for is on the down move, hitting minus 2,500 and doing it in a short span of time, and then it just reverses off of that. The reverse if you're in an uptrend.
Let me take the screen real quick, Dave, and show mine to show. Now this is the 2,500 bar that Dave had on his white background.
Oh, you know what? That's I've turned it into profile. It's George's turned into profile instead of numbers. I guess that's the only thing I've really changed on.
Yeah, so it's the same thing. And when we talk about short bars, what we're watching is, Dave, you can see my screen now, right?
Yes.
Okay, so what we're talking about is like when you can get a short bar when it closes, that means that a ton of volume must have come out because it got to 2,500 either plus or negative quickly. And it's the call of a turn. That's kind of a short bar, but not really, But it's not just the call of a turn where you could say every time it's a short bar on a rally, it's going to break. You got to use other stuff. It's just a good kind of heads up. But sometimes it's also the call of a continuation. What it is pretty much a tell that we're going to keep moving. Either we're going to start moving again, either down on a reversal in this case, or continuing. Like this is a pretty short one. Look how quick that one came out as we're going through. Well, this was reversal city today. We reversed from here after 8 o'clock. Oil brought us down. Then we reversed. We kind of come up to 60. We reversed from here to down in here. This was part of Dave's trade that he talked about. We come up in here to the 64, and we reverse again all the way back down through the open and to the lows. Now you've got a big small bar, we could call it. big volume, but it come out quick, and this is either going to be, and this is this isn't something that you'll coin a phrase later, but it's either going to go up or down from here because of this small bar. We're going to get movement in the next bar or two away from here. It's either going to call turn or it's going to call continuation. I think you could use context. Well, I think you have to use context and say we reverse so much today, we might follow through. This might be a small bar for continuation. I wouldn't fade it. I would use this small bar as a continuation, and if I was short, I'd stay short. I wouldn't buy it, though, just based on context. We're not going to keep reversing all day. It's just not going to happen. We're not going to go from 53 to 60 to 53 to 60 to 53 to 60. We're probably going to have...
There's a really long, I just flipped back over to my main charts, and it is a really long negative delta bar on the three-way. And as I told you on the setup this morning, that it's really hard to fade those, a really, really low probability to fade a bar that long.
Two bars made a higher high with negative delta solid turn, says Chris. But here, after this short bar where my cursor is, what happens? We do get continuation. It's about a 2-point move through the low on this next bar. So that's why, listen, if every time this bar was tiny and short, it reversed, it wouldn't work. So it's not going to be an every time thing. But if it could be the hand that comes out of the screen to tap you on the shoulder or slap you in the face, that's a good indicator. I should make one of those where the hand comes out and taps you on the shoulder. Zane asks a question, Dave, you don't mind answering. I don't know if you got to run, but if you don't, can Dave describe how he's seeing the fight to put a level on between the profile combined with the PNF? Does that question make sense to you?
Yeah, let me put this chart back over here. Oh, I'm not sharing. You want to flip the screen back to me again?
Yeah, hold on. I sure do. Dave. Yes? Okay, you should have it.
Okay,
you just have to make it whatever screen you want it.
You got it? You seeing it now?
Yeah.
There it is.
Yes.
Okay. So it is, you look across and look at the rotation. So you look at, let's take this one right here. So I'm just, when I set this one, I looked at top of this right here, bottom. Let me bring a pin out so I'm drawing. So you're looking at the top of this. You're looking at the bottom here, the top of the next one. Oh, it doesn't stay when the chart's live. Let me turn my data off so it'll stop updating. And so we're just looking at all these rotations and where they stop, either going up or going down, and trying to cover as many as possible with a one. This is a 4-tick. All these are 4-tick and one handlebars.
They're 4 PNFs, right?
Yeah. Oh no, this is a 10 PNF.
Oh, okay. So you're looking at consolidation on a 10 PNF.
It'll show up in a 4 too. I originally did it with a 4 PNF, Anthony, but what happened was it was taking up too much screen space and I couldn't crunch it down small enough.
Got it.
So the difference in this chart between a 10 and a 4 is nothing. I mean,
But you start. Yeah, you start from your left working right, and anytime you see a fight, you'll put, is it a 4-tick or a 2-tick area?
It's a 4-tick.
4-tick area.
Yep.
You'll put, like at the bottom, like here, I'm looking at one right now that is the lowest one you have. And I'm thinking you put it there because between Wednesday and Thursday, there was that flag, and you're putting it at the bottom of the flag. Yeah. Is that why you made that a level?
And this, and this, and this over here.
Nice. Okay. So you just pop it in there. I like it. So there's a little art to it.
And there's, if you look down here, we don't have anything on it, but this one would be one here. So you've got this, and it would come across to here. and that would be one as well. You got all these rotations. It might be a little bit lower. I need to mess with it a little bit, but that's essentially the idea, is looking at where the high volume areas are, and you'll notice I get on the edge of high volume areas a lot, like right here. And this has changed since this morning as we've traded some. But we're looking at the edges of high volume and these rotations. So this is a really good one right here. Same down here. If you wanted that, down here. Go over here. I mean, it's just all lining up rotations, because that's where the fight was.
Yeah, you get good at it. You got to do it, though. You got to do it. And these you found to be really high probable levels, right?
Really, really good. And here's the other thing that happens. I told you I did all the equity the 6 equity markets and the bonds and the notes and the yen. Well, when you get multiple equity markets trading into support or resistance, then that's powerful as well.
Yeah, I like that. I've always told people with profiling, why profile if you're a really keen on profile, why would you just profile one market? Profile the ancillaries too, and see when they come into the same quote profile setup. Tell me that ain't powerful. Are you always doing this? Are you always taking 5 days kind of back or a week back? Is this the exact chart you're popping these in or coming up with them?
This is the exact chart, and so I leave the 5-day profile up. That's unchanged, and I will expand or contract this based on how tight I need to do to get all the price action onto the screen.
So the blue drawings you put in there would have been levels if we're closer?
If we're closer, yeah. Oh, yeah.
You just didn't bother putting them in?
Correct. Well, I ran out. I mean, we can only get 10 levels in there. In fact, I suspect that if I open up my spreadsheet right now and I went and looked, there probably are levels there already. They're just not visible because I've got 10 up higher.
Putting levels in, I never thought of it this way, but putting levels in is also a great way to prepare, because you're just by default reviewing kind of what happened and where the fights were. Just like I said, that if you're profitable because you're using market relationships and order flow, then you're going to stay or give yourself the best chance to keep it. You're going to keep it, and you're going to give yourself the best chance to stay consistent. If you're using fights and stuck traders where the blood is for your support or resistance level, that's also going to be the reason why they're going to work the best. So it's always the reason why you have something. No, that's good stuff. I had a question / comment to make that I can't remember at this point, but a great way. Thing that kind of a reminder, some reaction and feedback from people is they've really liked the exercise of going through a chart one bar at a time to try to predict, as a way to kind of get confident on what should happen next based on what's happening. So I've gotten good feedback from those who have done it. They like it. Just kind of.
And are they doing it with market delta with playback? Because you can do that, and if you want to I did that exercise, but using market delta playback and speeding it up to make you start out at half speed and then start speeding up, and I was up at 4 and 8x time.
I like
watching it that way, so I would highly recommend that as well.
Yeah, then you don't have to click the button.
Same exercise, different way. Yeah.
Yeah, that's good. You speed yourself up. It's just going to give you confidence. And hey, if you're wrong, you're supposed to be. You're not supposed to be right and making every call. And that means you're trying to be right and making every trade. You shouldn't be surprised to be wrong. Trading is a funny overlap of, how do I get confident being wrong? How do I get confident knowing that I'm probably going to lose money every time I click the mouse? Now, I shouldn't say knowing, but knowing that I'm not surprised when I'm wrong. That's a good way. How do I get confident at something where I'm wrong a lot? Wow. And people realize why this is so difficult. It goes back to the simple, you got to find the abilities to front run a market. Now, if you had the answers to the test, like some firms might have had, or some of the high frequency accusations are about, What do you think answers to the tests? What do you think those answers are? People's positions. We have to have the skill to accurately assume where people are stuck. If you had the answers to that test, you could trade with your toes. So the edge, the advantage that high frequency predatory systems are using is very simple. It's very simple. Front running people's exits. That's what we're trying to do. Only we're doing it with a skill. They're doing it with the answers to the test. They're not using some sort of brain surgery. You know, the quants that they need to build everything is where the complexity comes in. But what they're trying to build towards is the simple who's stuck. Big buy order comes in. Let's race it and buy it before it. Wow. Why didn't I think of that? Difference is they're getting the information illegally and unethically. But that's all that they're doing. Don't let that intimidate you when people talk about HFTs and algorithms. You know, people talk about that. They don't know what the hell they're talking about. When they're talking about, oh, there's this system or algos. You know what algos are and high frequency stuff, what they're trying to do. So I thought this was an excellent session, Dave. I appreciate you doing this. Dave's in the team room almost every day. Make sure you guys are going, checking it out, and talking. You know, I'd go in there once in a while. We have good conversation. Sometimes the conversations aren't specifically like talking about trading, but the market's slow, so we tend to do that as if you were in an office. If you guys don't have access to it, email me, and we'll get you access to it. But I know Dave is in there daily. George is in there most mornings. So this was another great session. Dave, everyone's thanking you, and I do too, so I appreciate it.
Great. Hope everybody enjoyed it.
They did. Thanks. I'm going to stop the recording now, so this will end this session.